Hey everybody, good to be here today. My name is Brent Moores. I'm sitting in for Cam today. He's out today. He'll be back next week. And by the way, he's the normal instructor on this class. Great class. Encourage you to join each week here with us. But today I'm here with Connie Hill, who's helping me out in the chat. I appreciate Connie. As you have questions, feel free to type those in the chat between Connie and myself. We'll do our best to get your questions answered. I'm going to take a little different twist today on this. Today I want to talk about an investing plan. We have some investing plans, if you're not aware, on the Schwab.com website. I want to go through that with you. I want to use the Schwab.com website to talk about dividend investing. I know Cam's usually using the Thinkorswim platform, desktop software. Today we're going to hit up Schwab. We may hit Thinkorswim just a little bit, but for the most part, we're going to be talking about Schwab.com. I'm glad you're here, whether you're watching live or on a recording, and encourage you to follow us on X at Brent Moores CS, at Connie Hill CS. And by the way, let me just talk about, there's a few disclosures I just need to go through before we get too far into this. The material today is intended for general, informational, and educational purposes only. This is not an individual recommendation or personalized investment advice. There are risks associated with investing in dividend-paying stocks, including, but not limited to, the risk that stocks may reduce or stop paying dividends. That's an important thing to consider. It's not the only risk. Of course, the stock can go down a lot too, but Schwab does not recommend the use of technical analysis as the sole means of investment research. The paper money software application is provided for educational purposes only. All investing involves risks, including loss of principal. Past performance is no guarantee of future results. And there's no guarantee that an execution of a stop order will be at or near the stop price. And diversification does not ensure profit and does not protect against losses in declining markets. Okay, here's what I want to do. I am on the Schwab.com website, everybody. And so it may look familiar to you, but something that may not be familiar to you, because it's a big website. There's a lot of different areas to it, but something I want to point out to you, not just for dividend investing, but if you go to learn right over here, and go to courses and pull that up, and it's going to come up. And sometimes you got to click on courses at the top of the page here again. I don't know why it does that, but we have some courses that I think you'll find helpful. These go through, you go through at your own pace on these. It says duration 3 hours. Well, really, if there's areas that you can skip by them. And if you want to read stuff twice, you can read it twice. It's text and there's embedded videos. There's little quizzes to try and check your progress. Simple steps for a retirement portfolio. I recommend going through that course. Stock investing with fundamental analysis. You want to learn more about that? Great course. Stock trading with technical analysis, and so on. Hey, income investing. Okay, this is one that is really want to go through, but let me just show you. There's some other courses here as well. You just scroll down. If you have not checked these out, I would encourage you to check these out. That's the first thing. Okay, I'm going to click on income investing here. I'm going to pull this up, and it has lessons. Now, the income investing course goes through, and it says introducing dividend stocks. Dividend stocks. That's what we're talking about today. I'm going to go through this a little bit more depth today. But you want to learn more about bonds? There's a bonds section for it. You want to learn about REITs? There's a REITs section for it. That's not what I'm focusing on today. I'm going to be focusing on the dividend stocks information. You can go through this. I'm not going to go through this right now, but you can go through it and read all about it. But what I want to point out to you is below the course, and there's other courses that have this, under resources, right there, resources, it says income investing sample plans. And so I want to go through this with you. Now, does this mean this is a recommendation that you should trade exactly this way? And the answer is no, there's not. In fact, there's disclosures to start it out. And, these are sample investing plans. But I think sometimes if you're starting out with something, you start with kind of a template to get you started before you go on in your own way. This may not be a bad way to learn about dividend investing. Each week, Cam goes through little variations of dividend investing, but I think this may be a good way to consider starting the process. Or if you've been going through it, maybe get some new ideas from it. Now, there's different investing plans on here, but I'm just going to look at this first one today. Dividend stock sample investing plans. Okay, objectives. Create a potential stable increasing income stream from stock dividends, diversify a portfolio, add an element of potential growth. So these are all the objectives of it. But here's the watch list criteria, and this is really where I'm going to focus on today. So watch list criteria. This is what we're going to do is we're going to go to the screener on schwab.com in just a few minutes and go through and add some of this stuff on here. So, first thing, a current dividend yield. So how much dividend yield do we want? This is saying a current dividend yield greater than a benchmark like the S&P 500 can indicate a good income stock candidate. Well, here's the thing. I'm going to go through this mostly as it says it. I may tweak a few things. Okay? And this is going to be one I may tweak a little bit. Because right now, the S&P 500 pays a very low dividend compared to what it has historically paid. I think right now, I checked about a week or so ago, a couple weeks ago maybe, it was paying like on average about 1.2%. That's pretty low. And if you're a dividend investor, finding something with, say, a 1.5% dividend, well, you know what? That's just kind of average. And in my mind, if you're looking for dividend stocks, you want something that's above average. So we may tweak that up just a little bit above there. But you see the principle. The principle is you're starting with a benchmark, and that's going to be kind of where we're starting there. Okay. Now, Eva in the chat says, hey, let's move it above inflation. Okay. When we get to that screener, you can tweak it how you want it. And maybe you want it even higher than that. So very often I'll use like 3% because I think that's certainly reasonable. A caution though, very typically we don't want super high dividends. If you see something with a 8, 9, 10, 11% dividend, sometimes you'll see them even more, it could imply a little bit more risk in that company. All right, so that's the first thing we're going to do is we're going to look at a current dividend yield there. I'll go to the Schwab website in just a minute, but before we do that, let's talk about the next one. The stock's been raising its dividend over the past 5 years. Now, sometimes people will use things like dividend aristocrats or dividend kings or something that have been paying dividends for 25 years or something, increasing their dividend for 25 years. Nothing wrong with that. But for this plan, we're going to say at least 5 years. Okay, at least 5 years. Well, it's 2026. 5 years puts us to 2021. There's quite a few stocks that actually maybe cut their dividend or didn't raise their dividend back in 2020. Do you remember 2020? What was happening in 2020? Yeah, COVID, right? And so it's maybe a little bit understandable at that point. Now, those companies that continue to raise their dividends throughout that, more power to them. That's great. But we're going to use that 5-year dividend growth rate, okay, on this. All right. So there we go. So that's going to be kind of the second parameter. Now, both of these, I think, are whether you want to tweak the numbers that we're using or not, that's fine. But I think they're both good general ideas. When you create your own plan, you're probably going to want to have a minimum current yield, probably a maximum current yield too. You're probably going to want it to see the dividend raised over multiple years, probably. All right. Okay. Next item. 5-year average dividend payout ratio. What's a payout ratio? A payout ratio is just how much the company is paying out in dividends as a percentage of the earnings they bring in. So if they bring in, I don't know, I'm just going to make up a number, $100 million, and they pay out $50 million in terms of dividends, that would give them a 50% payout ratio. Maybe I should have flipped those, numerator, denominator here, but that would give them a 50% payout ratio. Let's say a company pays out every penny it makes in terms of earnings, in terms of dividends. That would give it a 100% payout ratio. Do you see a problem with that? You know, at that point, they have no money extra to invest in future project growth or anything like that. So very often we'll put a maximum on that payout ratio, that dividend payout ratio. In this, it's saying, look at the 5-year and look at 40% maybe, okay? That's actually, you know, that's not that high. There's a lot of companies that just consistently pay above 40%, but a lot of people will say, well, we don't need to be that strict. Maybe something like, you know, below 70% is what we're looking for. But anyway, we're going to use this plan here for this one there. All right. Now, in the chat, Eva, I appreciate you. Eva mentioned REITs. I'm not going to get into REITs today, but very often with REITs, it's kind of a different ballpark. In fact, I think, am I mistaken here? Is there a REIT? I think there's a REIT plan down here, in fact. Let's go on down. Bond. There's the bond investing plan. Here's a REIT plan. Okay, different rules. I'm not going to get into them today, but that's, you know, that's what you know, you can get into REITs on your own. We have the plan. Just scroll down on the page, you'll get that REIT plan. And as Eva mentioned as well, REITs have to pay out 90%, okay? So that, you know, this would automatically, that 40% would automatically exclude every REIT out there for that reason, right? Just because that's a law basically with REITs. So this is the third item on that list there, okay? That's the third item on the list. Okay, fourth item doesn't really have that much to do with dividends per se. ROE, return on equity, kind of sometimes they call it a management effectiveness ratio. But basically, the point is this. When you're investing in dividend stocks, you want stocks that are going to be healthy and sustainable. And there you go. I mean, you know, if the company is going to be poor financially, not only are you likely to get a dividend cut, but the stock price is likely to go down, which is a huge, huge risk. And so what we're saying is we want an ROE above 10%. 10% isn't that high, okay? It's just saying, yeah, I want a reasonably healthy stock. Now, obviously, there's a lot of different measures for health of a stock, more than just ROE, but ROE is a pretty common standard one that looks at a lot of, you know, it tells a lot about a company. So that's another one we're going to look. Got a couple more. Debt to equity ratio. We don't want the company to be in too much debt. Here it's saying you want at least $1 of assets for every $1 of debt. That's a pretty low bar to hit, I think, to be honest. Most companies are well below that. And so that's something we're going to consider there. You may decide to tighten that up a little bit. And a PE ratio. Similar to the ROE, this isn't necessarily have anything to do with dividends, but it's kind of getting at, well, the health of the company. Is the company overpriced? And so we have the PE ratio. Is the company more volatile? Is there more chance for a bigger drop? You know, on any stock you buy, there's the chance for the drop. There's no doubt. You always have that risk. But doing a PE ratio is kind of a standard thing. We want good stocks. In other words, we don't want just high dividend payers. All right. Now, before I move on and we go to the Schwab.com website and actually put this into action, let me just mention a couple other things on the plan. Dividend stock funds. Can you do ETFs Or if you don't want to pick individual stocks, can you do ETFs or mutual funds? Yeah, it gives some rules here. I'm not going to get into those today. In fact, I can't even show ETFs today. But just realize if you're interested in that, there's some suggested maybe isn't the right word, some sample rules that you may consider for your dividend stock plans. Buy assets according to your allocation, right? We're going to still have a diversified portfolio. Buy assets that produce cash flow according to your payment schedule. Buy underweight assets during periodic rebalancing, okay? All right, but what you're going to see a lot of this is broadly diversified stuff here, okay? We want to hold different individual stocks to diversify. All right, let me move this out of, actually, let me go back here. Let's go back to the website. Here's the Schwab.com website. Just as a quick reminder for everybody, I went to Learn before and then to Courses to get to that and to get that investing plan. Now, let's go to Research. Let's click on Stocks. Research, Stocks, Stock Screener. Okay, here's Stock Screener. And let's create our own screen. There are predefined screeners on here. There's a dividend growth screener. I don't remember, to be honest, exactly what the parameters are. Well, let me click on it real quick. Let's just look on it. Here's this. You can see what it's looking for. Annual dividend yield of over just something positive. Okay. Year-over-year increasing dividends. Not real rigorous here on these parameters. We're not going to do that today. We're going to go back and let me just click back, go to Stock Screener. We're going to start from scratch with our own screener here. All right. So what that means is we're going to be going over here. Now, this isn't, what I'm about to say isn't just for individual companies. Let me just pull up a company real quick here. I'm going to pull up, I don't know, GE. Okay. Before we go to the screen. Here's GE Aerospace. And for any individual company on the Schwab.com website, you pull up the company, you can see information on it, but you can go down and you can see there's a section on dividends. Yeah, great. Good information on dividends. Click on Show More. Show More for more information on dividends. You can see year to year how the company's dividends been. 2025, it's maybe a little small for you to read. 2024, 2023, you can see the yearly payout of dividends for a company there. I think GE was struggling even before COVID hit there. But anyway, and you can see the history of dividends here on this chart. Let's see, let me go, and you can see other things too. You know, there's your payout ratio down there. Okay, we mentioned that. And there we go. All right. Now, let's go back to our screen though. Okay. Research, stocks, Stock Screener. I'm going to create my own. We're going to create the screen. Okay, so we're going to use those parameters we just talked about a few minutes ago that were on that sample investing plan here. When you create a screen, for those of you who aren't familiar, the general categories over here, there's a little plus sign next to them. You click on the plus sign and it will open it up. There's a bunch of different subcategories under basic or dividends or so on there. So that's how you can do it. Then you click on it, you add it over here, and then it adds it there, and you can tweak the parameters on it. Fair enough? So that's what we're going to do. So in other words, for example, let's start with dividends. Click on dividends. I have a whole bunch of different things I can do to dividends. I'm not going to add them all. Just a reminder, this is not just particular for dividends. This is for any screener. You can add a whole bunch of stuff. There's no perfect stocks out there. You can add everything you desire, and you're going to come up probably with 0 stocks that meet all your parameters. Like if you're too strict on what you have. there. All right. So the process is you create the screen and then you tweak it as necessary. But let's do this. Let's go to annual dividend yield. Now, here's the one that it said, well, greater than the S&P 500. Okay. This greater than the S&P 500. So let's go here, and there's these kind of discrete categories here that you can click. If something doesn't fit exactly in the category, then you can click on this. It says enter specific values. I'll show you that in just a little bit, how to do that. But right now, I'm going to say 2% or greater. That's not that much. Maybe you want to do 3%. I'm going to go 2% to 3%, 3% to 4%, 4% to 6%. I'm not going to go higher than that, though, right now. Okay. So there's my dividend yield. It's a good paying dividend, good dividend payer. Doesn't mean it's going to continue to, but it's also not ridiculously high either. Okay. So we're going to start with annual dividend yields. I'm going to add another dividend parameter here because the second item on there was paying dividends over the past 5 years. Well, this doesn't exactly do it. I'm going to go to a 5-year dividend growth rate. Now, the reality is dividends could have gone up and then down and then back up, but even more. And on average, it gives you a higher growth rate. But we can look, I showed you where earlier, I'll show you again, where you can look at the past dividends and make sure that it's growing over the past 5 years. But I'm going to go at least 5%. Okay. And I don't care. That can grow as much as we want on that. And you can see, as you look at this, you can see the total matches. Okay. So, how many stocks out there are paying at least a 2% dividend? Well, 1,800 stocks, right? Well, of those, how many are have at least a 5%, 5% annual growth rate for the past 5 years, average growth rate, I should say, of the last 5 years. 427 of those, 825 total, but the intersection of those two would be 427. Okay. Now, another item we mentioned, payout ratio. Okay. It said in the plan, payout ratio 5-year average. That's what I'm going to click. Now, if you don't want to do the 5-year average, you can do just current payout ratio if you want, right? That's fine. It said payout ratio of less than 40%. Interesting. That's actually pretty low in my estimation. I think I mentioned that already. But this is a 5-year average. Sometimes they go up, sometimes they go down. And you probably don't want to overreact to just a stock temporarily having a higher payout ratio. If you think about just kind of think about your personal life, you bring in money just like a company brings in money, and you pay out money. We're going to, like, the analogy is you bring in money, that's like your income, that's like the company making earnings, and you pay out money, and that's like the company paying out dividends. Well, you have different expenses personally. So at some points, sometimes your expenses may go up. And so, in fact, for a particular month, your expenses may be more than the money you bring in. Probably not a terrible thing in a month, but over the long term, that's not sustainable necessarily, right? Well, for a company, you may have a higher payout ratio short term, but that's why we're looking at an average here, I think. Okay? So that's what I have. We're down to 184 stocks. And then you want to, then we'll go forward. Now, we're not just going to look at dividends. I said there's some other things we're going to look at. We're going to look at things like ROE and PEs and stuff like that. So I'm going to go down to financial strength, and I'm going to go to return on equity. And on the plan, it had at least 10%. Return on equity, trailing 12 months, at least 10%. There we go. And we said debt to equity, and we're going most recent quarter. MRQ is most recent quarter. So there's some different little abbreviations here. MRFY, what's that? Most recent fiscal year, most recent quarter, trailing 12 months. See, I think that's all of them there, okay? But we're doing debt to equity. And we said, we want it to be less than 1. Again, not a huge ask there. It knocked it down from 122 stocks to 93 stocks. There we go. Okay, let's go on. I think we got one more here, which is PE ratio. It's under valuation. Price to earnings, trailing 12 months, and it said between 10 and 30. So we'll just click on those. Look, we've got 61 matches here. Probably more than you want to look through, to be honest. And so I'm not going to click on this quite yet. Actually, let me show you how to modify this. Let's say we click on this, because I see some questions in the chat on modifying. Look, we just came up and we go, well, that's too many. I have multiple pages I can click on here. If I want to go back and modify this, don't click your back button. I don't want to do it because it may mess it up. It may zero it out. Okay, we may start from scratch. I don't want to do that. But instead, what we're going to click on is modify criteria. Okay, when I click on modify criteria, there we go. Now, there's some questions in here. Can I export? You can export to CSV. Let me go back here. I think that's on the other page as well. Is it not? Yeah, export to comma space. So this is to a spreadsheet if you want to export it. Okay. Export it right there for those of you who are interested. Again, I'm not going to refresh. I'm worried the screen would go away. I'm not going to click my back button. I'm worried the screen would go away, but I'm going to click on modify criteria. Now, so as I mentioned, I think 61 is probably more than we want. So we can cut this down a little bit. So where am I going to cut it down? I'm going to cut it down to some that maybe I said, well, that's kind of a low bar. I said debt to equity ratio. Well, look, that's like 100%. That's 1 equals 100% here. I'm going to click on enter specific values, and I'm going to say between 0, and I'm going to put in 0.4, okay? Click on, oh, now it's giving me 45 matches. All right, so that's narrowed it down, but maybe we probably want to cut it down. I still don't want to look at 45 stocks. What about this? What if we change that yield and say 2 to 3%? I mean, that's fine, but really, if you're a dividend investor, that's not really a spectacular dividend, to be honest, if it's paying 2.5% or something like that. So I'm going to narrow this down a little bit too. Notice it went from 1,800 stocks to 1,100 stocks. Now we're down to 15 matches. That's more like it. Now, something I would encourage you probably to do is to go to, where is it going to be? Under basic, click on sectors and industries. Now, I can narrow it down if I want to a specific sector here. I'm not going to do that. But what happens is when I look at it, click on view 15 matches, just by adding it, not narrowing it down at all, it gives me over here the sector that it's in. Look, we got materials and financials and IT, discretionary, industrials. So we do have a mix, quite a few financials, but there is a mix here, and you can see that without narrowing it down. And, earlier we mentioned about having kind of a, diversifying your portfolio. So that may be a factor in there. If you already have a lot of IT in there, maybe you don't want to add in more IT right now, or industrials or financials or whatever. So, or there's some particular reason you think, well, materials are overbought right now. Maybe you want to avoid materials in that case. All right. Now, let's say you want to add other stuff in there. You can do that. There's a question on ratings or whatever. You can go to analyst ratings, right? Gives you all these different analyst ratings you can look at there if you wanted to do that. All right. So you can do that. I'm not going to do that right now. But would that be a way of narrowing it down? If you go, well, I want fewer than 15 results here. That's a way to narrow it down. So there's one other common way I'll narrow things down, I should mention. And there's a lot of, it just depends on the search, I guess, what you're doing. There's one other common way, and that is if you go to basic and go to index. And you can say, you know what, of all this, I just want to look at stocks that are in the S&P 500. Click on apply. Okay. And then you come up, and then it's narrowed it down, and it's taken all those stocks and it narrowed it down to the S&P 500. Now, 15 stocks maybe was a little bit more than I wanted. 2 maybe is, I could certainly use probably more than 2, but there you go. Let's go here. And let's just look. Let's click on one. Principal Financial Group. I click on that. It's going to come up here. And then if you click on the name, it's going to give you the full page here. It gives you another tab here. Okay. Principal Financial. Now I mentioned where dividends are. We're going to go to that in a sec. Let me just mention this because there's some questions in the chat. If you're interested in ratings a report on an individual stock, I showed you where you could add it to the screener if you want, right? But you can see there's these are third party, these aren't recommendations. But if you wanted to look at those, you could do those. I'm not recommending you're using those. I'm just showing you where they are on the screen. That's all I'm doing here. Okay. Let's scroll down. Dividends. What I say to do with dividends. Oh, before we click on dividends, I said click on show more. We're going to do that. But just if you want to see past earnings, you can do that. A lot of these sections on here, I would click on show more, right? You want more in-depth on earnings? Click on show more. You want a more in-depth peer and ratio comparison? Click on show more. You want more on dividends? Click on show more. Let's look at it. Here's the company. Here's the past, 5 years. You can see the past 5 years of what the dividends have done. And you can see the growth in the dividends. Does that mean this doesn't fall off a cliff next year? No, it doesn't. We can't guarantee that. But hopefully by finding a company with, a reasonable PE, a reasonable payout ratio, a reasonable ROE, hopefully that helps you a little bit there. Okay. You can see past dividends. You can see when they were actually paid. So you can kind of see the schedule, March, June, September, December. That is typically going to remain consistent from year to year. So sometimes it's a consideration if you need payments at a certain time during the year. You can do that. These are quarterly. Different companies come out with different quarterly payments. So there's basically 3 different schedules because typically dividends are paid quarterly. There are some exceptions to that, but typically they're paid quarterly. Annual dividend yield, about 3.4%. That's not terrible. That's not really low, right? That's not concerningly high either. So seems reasonable. Payout ratio, 43%. I don't think that raises a red flag on the payout ratio being too high. Now, I think we put in max 40, average 5 years, so maybe it's ticked up a little bit, which is why it's showing up in the results. But 43% isn't unreasonable at all. So, and you can see the growth rates, 5%, basically growing about 5% per year, and you can see each of the year's payments there. All right. Now, if you want, let me close this back down. You can then go, well, I want to look at the chart, and I'm going to click on show more on the chart to expand the chart out. And you can kind of see that dividend payment Not sure why that is not showing on there. We know it pays a dividend. Normally, oh, it is there. I just missed it. There's a dividend pay. Okay, there's the most recent dividend payment on that. And if you go to a longer term chart, you can do that here. And let me go to a 5-year chart. Click on go. Okay. And here's our dividends. So you can see just kind of over time, 61 cents, 63 cents, 64 cents. And this one may have been kind of a special dividend. Actually, that one went, oh, no, that one's regular. 64 cents. You can see over time the dividend payments and whatnot. So different ways to look at past dividends. You can still use your technical analysis on this. I have a 20 and 50-day moving average on this. If you want to do technical analysis is not the sole means of investment research, and dividend investing is typically for longer term investments. It's not intended to be a quick trade. It's not intended to be a 1 or 2 month investment there. Okay. So you can go back through that here as you do that, play around with it, and go back, modify criteria. Maybe that S&P 500 was some, maybe I didn't want that on there. And then you can view your 15 matches and go through and check them out from here, one at a time there. But I don't think that's, I think that's a reasonable way to do this. Now, let's say you're using Think or Swim. Cam shows you Think or Swim each week in this class, so I'm not going to go into that in much depth. I wanted to show you Schwab.com website. But some of the parameters are a little bit different on Think or Swim. Let me give you an example here. You go to Think or Swim, and you start adding filters. Of course, you could do scan and S&P 500 if you want. As you start adding filters, and say you go to fundamental filters, what you're going to see is, for example, you're looking for maybe debt to equity. You're not going to see a debt to equity. You're going to see long-term debt to capital. That's a reasonable substitute for debt to equity. Okay, you can do the same thing if you want there. And there's some other slight little variations on there. You can't look, I don't think, at the 5-year average payout ratio. So what you can do is you just look at the current payout ratio on Think or Swim. What you're still going to do is you're going to run it, you're going to come up with a list of stocks, and then you can look at those individual stocks there. Okay? So that's Think or Swim. Our focus today is on Schwab.com, though. Just realize you may have to make some tweaks to it when you get to that Think or Swim platform. Now, I've basically gone through primarily what I want to go through here today. But on that plan, do I still have that plan here? It talks about entry rules. A lot of that is, it's not really, I don't really have technical analysis on here. Could you incorporate the two together? You can. Money management, a lot of it's diversifying. Exit rules. If a stock starts cutting its dividend, you probably have some sense of it because the stock's probably going to be dropping in price before that dividend cuts significantly. Because that's really, usually most investors interpret that as a very bad sign if a company starts cutting its dividend. If the payout ratio starts creeping up too high, this says 100%, that would be certainly a level of concern. If you turn long-term bearish on the stock, it's not a stock you want to stay in, because no matter what dividend you get, let's say it's a 5% dividend, a huge dividend. You know what? A 5% annual dividend isn't going to make up for a stock that's dropping 20% per year. So there you go. So I think the investing plan, I showed you how to get there at the beginning of the session, is probably, if you're starting out, it's a decent kind of template to get started with. It's not a recommendation that you use this exactly, but what's a kind of a way to get started, to think about these things, and then you can tweak them from there. we showed you putting it in basically as is and then tweaking a few of those categories there. Hopefully you found that helpful. Now, just a reminder, you can follow myself on X at BrentMooreCS. You can follow Connie on X at Connie Hill CS. And you can also get more of our webcasts on this Trader Talks Trader Talks channel on YouTube. If you're on YouTube, just subscribe to Trader Talks. That way you can get the content on YouTube that is of interest to you. There are millions of videos on YouTube. You got to be able to sort through. That's kind of like a screener. There's a lot of stocks out there. That's why you use a screener to sort it down. That's why you subscribe to channels like the Trader Talks channel here. Okay. All right, everybody. Thank you for joining me. Coming up next, we have Trading the Trend. Trading the Trend coming up next. And have a wonderful rest of the day, everybody. Thanks for joining me. Bye-bye, everybody.